Just a couple quick updates before we get started, y'all. So reminder again that there is a new user portal that is at carnivoretrade.com/profile/dashboard. That will be your new hub for all the links and internal experience of Carnivore. We're adding a lot more there soon, and I know it's not super easy to navigate normally on the website right now. So right now, if you log in, you'll automatically get there. But if you go somewhere else and you're having trouble getting back there, just head back to carnivoretrading.com, the homepage. And if you are logged in to your account, you'll see this return to dashboard button up top. And that's how you can get back to all your links, your weekly live call links and daily wrap academy and more.
Cool.
Thanks, y'all. Then again, on the weekly calls page, you'll get a link to this call right before it starts, about an hour beforehand, and recordings are posted on that page within 36 hours of the call. The app is still in beta testing, but you can download it on iTunes or Apple Store right now. Android version will be out this week. We originally targeted Wednesday. We're still on track for that. If we continue to run into one issue that we're working on right now, worst case scenario, it'll be Thursday, but Android app is out this week.
Good.
Yes, sir. Yeah, I'm very excited. And finally, the panel today, minus Bonnie, sorry, Bonnie, I'll add you on next time. But we got Dutch, Trader Z, and Jay, who Jay will be in the chat if you want to ask him anything. Dutch and Z and Jay are the co-founders of Carnivore Trading. They're on the call every week. And then part of our crew of panelists, we have Godfather, Roger, and Powell. And then Bonnie, who's our other serious options trader and just local badass, is joining us today too. So thanks, y'all. Thank you all for being here. And without further ado, then I think, Dutch, you want to start off with a message to all the new carnivores.
Yeah, remind me what I want to tell
them. You were going to mention that because we have lots of new carnivores coming on lately, and you wanted to address.
Oh, yeah. Okay. So one of the things that we wanted to get it across is a lot of people who are new will assume that we're not really any different than some of the other guys that are out there doing what I consider and what we consider to be some sort of schlocky stuff in this business. We do not, if you'll notice on our website, we do not advertise. We do not allow advertisements. We don't have any alignment or deal or any kind of relationship with any brokerage firm. So there's no brokerage firm that we that pays us to either have an ad or to mention them in the wrap or anything. You'll notice the wrap also does not have any advertisements in it for any outside third parties. We also, one of the things that people kind of assume that everybody in this business might do is maybe buy options ahead of an alert that goes out. And then when, the thundering herd comes in and drives the stock up, 50 cents or $1 or whatever, that we sell our personal options and make a big profit. That is potentially not really illegal, but it might also be looked at as, market manipulation or front running or something like that. Now, you can't really be a front runner if you're not governed by, FINRA and the SEC or whatever. So I think some guys do it. I know a lot of guys do it. We don't do it. It's just part of the things that we do is we just will not touch any of that stuff. We also get a lot of emails from people who actually join Carnivore and they are promoters and we can smell them a mile away and they're sending us, hey, you got to look at this stock, or hey, you got to look at that stock.
Yeah.
And, so we have a very, from the beginning, very tight group of people like you see here on the screen. These are the people that we trust, who do the research with us, who find ideas with us. There are certain carnivores out there that have been with us forever that we know, and we know that they're good traders. So, when they throw us something or they give us a piece of research that they've come across or something, we know that it's really just coming from an honest source. So I just wanted to get that out of the way because I want people to understand that our alignment has to be 100% of the time with you making money. We can't step left or right of that line. We have to stay right on that line, and we've worked really hard to do that.
Zero affiliation with any of the companies that we recommend.
Zero. And I actually just sent something over to customer service and Connor today, which was a long list of brokerage firms that are sort of more amenable to frequency of trading or whatever. And I said, look, maybe put this in a PDF or something. And when somebody asks the question, you just shoot that to them because, we may use this one or that one, but the truth of the matter is we don't have a deal with anybody. And that's just the way it needs to be. Otherwise you cross into areas where I'm in conflict or we're in conflict with what others, we step outside of being in complete 100% alignment with our family of traders, and things start to get weird. So with that, I will tell you that last week was tough. TG Therapeutics and GCT spanked us pretty good. TG was part of the whole, all of a sudden, the hottest sector on the planet, biotech, decides to stop being hot. And just completely kind of left us, right? All except for maybe one or two stocks out there. But the whole sector cooled off, which, we could expect, right? The GCT, keep in mind, we took a pretty nice whack on that. However, it did start to climb back. So people who did hold it have recovered a little bit. We're still a good 4 or 5 points below where some people have as cost basis, I'm sure. Keep in mind, however, that trade made us about 50 grand before this. And then we took about a $24,000 whack, last week on it. So there are folks that I run across here in town that are carnivores, and some of them have said, hey, I'm making a ton of money on GTLB. I made a good lick on GCT and I'm staying with it. I think it's a good company. So, look, I think what I said in the wrap was, it just goes to show you, any stock can turn on you at any moment. And so you don't fall in love with them. Okay. And hey, I should have dropped that one off at Danny's at 26. Okay. In hindsight, but I didn't. And, she turned around, grabbed my gun and shot me full of holes. So what am I going to do? I'm going to go on a really long bike ride. That's what I'm going to do. So that's what I did yesterday. And I told my family, I said, hey, if you don't hear from me on Mondays, just send a chopper out over the desert or something, man. Because I don't know. So it's a hell of a ride, hell of a lot of fun. Godfather, you've been on a lot longer rides than I went on, but man, this one was cold. It was cold out in the desert, man.
I think I think it was hot and down in the base, right? And then we got up, there was still snow in the mountains. That was what, in June?
That was a great ride with you, man.
That was
awesome.
Awesome.
By the way, ladies and gentlemen, this man can ride. Okay. I don't know how he did it, but he's going, Mach 10 down a hill and filming me. And I'm like, he's going to hit a tree or a deer or something. I don't know. Anyway. It was pretty amazing to watch you ride, brother.
Appreciate it, brother.
All right, with that, I will tell you that we had a transition week where we kind of transitioned out of the tough stuff, broadened things out a little bit, went down in size. This is what you do when you get hit hard and you get spanked. You got to say, okay, what am I going to do now? I'm going to trade smaller. I'm going to go up in quality maybe, and I'm going to look for some really good setups here and some stuff that's not going to hurt me that bad, but that's going to participate, that's moving. We started to feel a movement into some of the higher cap tech names again, which is a good thing for the market as a whole. So we ended up going into about 12 positions. Our worst move was really jumping into that Bitcoin ETF a little bit early, but we did about a 11% allocation of the overall portfolio, and we didn't do it for a trade. We did it for more of a longer term run. I will be fine with holding that thing there. I know it's going to be volatile, but Bitcoin is Bitcoin, right? So judging by the past, we can look at this thing and see what it does. Look, if you want to put a really big wide stop on it, I think we probably will. But the truth, because it can get cut in half. Okay, there's no doubt.
We got some charts we'll share in a minute, Dash.
All right, that's cool. All right, so we got rid of the rest of the biotechs that we had. We had a little Mersana in there. We had a little C4 in there. We had TG Therapeutics that was in there. And we got rid of those. We actually went back into GCT as it started to recover. So that's now our third largest position. And we picked up, let's see here. So we've got, we picked up some high quality stuff. I don't know. You've got it probably on the screen over there. And we'll get to the current portfolio later. But Trader Z has got some hot stuff to talk about. A stock that we do not have in the portfolio yet. Looks like we'll probably hitting that tomorrow morning. So go ahead, Z, tell them what's happening.
How we doing, everybody? Welcome. Thank you for being here. Let me get the screen share going here. You guys should be able to see that now. Welcome to the weekly call. It's the 15th of January. The month is flying by. Let's go through our disclaimer as always. We're not a registered investment advisor. Past performance, no guaranteed future results. All the carnivore trading portfolios are hypothetical. Nothing on the call should be construed as individual investment advice. I think I'm going to add do your own damn research to that list. We put it in real small print down here at the bottom. So right now, Dutch was talking about Bitcoin. I got a funny little meme I saw online, and then we'll approve the ETFs right into weekly resistance, which is kind of exactly what happened. So we hit the 0.618.
That's funny.
The resistance level exactly, and touched it and bounced down a little bit. I wouldn't read too much into it. I think if you look at,
Hey man, if that thing finishes if that's making a cup with maybe a handle later, if that's a cup that's going on, that thing's going to 60.
well, so here we go. You got probably support at 36 at the lowest end of the range. I think you may end up holding this 42 mark and just bouncing around for a while. And then you thrust higher, trying to get back up to the all-time high. Part of the reason why I think that, Dutch, is if you look at the ETH Bitcoin ratio, ETH is actually breaking out. So the altcoins are moving. And that's pretty bullish in cryptoverse. So
A lot
Well,
of
isn't that good for Coinbase?
hey, in theory, yeah, the
be.
alts are where they get a lot of their trading action. The ETF obviously was considered somewhat of a threat, maybe to some of their Bitcoin trading, but no ETFs for all the altcoins that are out there. So something like Coinbase would definitely be a beneficiary of this doubling. And granted, it'll be, sort of crypto is always tied to Bitcoin, but nonetheless, we saw ETH really break out pretty hardcore last week against Bitcoin, and I think that's anticipation of an Ethereum ETF coming. So put that on your radar. Until you break 40K, I wouldn't get negative at all. I think then you got support at 36K if you were a buyer. But anyway, we'll talk Bitcoin as that develops. We're in it now, so we'll talk about it more often. But it's I sent this to Dutch and I put it on Twitter. It's all one trade, everybody. And what I mean is, if you look at cross asset correlations right now, we're approaching an all-time high. And this goes all the way back to 2002. So all these markets that we watch and we talk about, they're moving together. And I talk about the bond market all the time. And the reason why is because it's positive correlation with the stock market. So you're finding clues about what the stock market's going to do in these other markets, like the bond market. And, we continue to do that. We'll always do that. We also kind of try to figure out what's going on with the Fed. So, we're consistently asking these three questions that we brought to you on these calls. Right now, Fed expectations are for the cuts begin in March. We'll see. We got one March, May, June, July priced into the market now. We'll see if that comes to fruition. This is what it kind of looks like on a chart. You can see where the cuts start really beginning here and would accelerate into fall.
So I wanted to ask you about that because it looks to me like they're saying that they're going to still be right around that 3.90 or 4% rate at the end of the year.
Yeah, so there's two schools of thought out there, Dutch, where you got, hey, the Fed thinks that the market's gotten ahead of itself and they're trying to walk some of that back, and that's going to set up a reckoning in the stock market. Maybe. Okay, maybe that's possible. I think inflation would have to reaccelerate, and we got some charts of that in just a second. But I think to your question about,
I thought it'd be about 275 or 250 by the end of the year if the economy slows.
And look, and I think there's a lot of reason to think that think about how people were wrong about how they were going to pivot.
Right.
I think they're going to be wrong about when they're going to start to cut.
Right.
And the reason why is there's some economic data that makes
you think they're going to hold up longer and then all of a sudden panic it and start dropping like crazy like this?
Maybe they're going to hold off and not do March, but then
right,
the next meeting they're going to hit it.
Okay.
And then they'll end up doing 4 before the end of the year, and then that's really not all that far from where the market was to begin with. And so I think some of that fear is overblown. The other reason why I think they do this.
Before you leave that, let me ask you a question. On a presidential election year, have you done any study or work on when the Fed actually gets out of the market as far as raising or lowering rates prior to the election?
That's a good question, and I don't have the historical parallel, but there aren't that many, Powell, to look at, and it'll be interesting to see. I'll say this: I would imagine that history would tell you that at some point come next fall, they're going to want to have been done doing whatever they're going to have done, right? So that gets back to maybe the window starts early spring and you have until fall to do what you're going to do before you're kind of right into the election. I think the real reason, though, guys, that they end up cutting rates here is the bond market. And I think the correction that we're in, as we've said to you 1,000 times, is the worst ever. And that's where all the money's tied up. So you got this bond market that they've destroyed. You got a housing market where, look, the only party in housing was in new listings because nobody in an existing home was selling because they didn't want to trade their mortgage. So this party's rolling over. So they've killed the bond market, Dutch. They've killed commercial real estate. They've pretty much now started rolling housing over. Okay. The interest expense in the budget on the deficit's almost $1 trillion a year. Okay. So that'll be the largest line item at the current pace, even past Social Security. So they're creating this interest expense problem. And if you look at where money supply is, okay, I mean, this goes way back.
Damn.
Okay. It's time for the spigots to get turned back on.
Yeah.
So you're like, hey, what other data do you have that's says, hey, well, look, it's the same one. The ISM's contracted 14 months in a row. That's the longest streak since 2001. So in manufacturing, you're already in a recession. The only thing that's probably been propping us up is government spending on infrastructure and housing, which they've rolled over. Now, the government part of it won't go away, and that's probably part of why you've had this sticky inflation. But the real point is they cut because it's time to take your foot off the bond market's throat. And this is the TLT. You broke the trend line, right? This was the big bottom, long term. Okay, we rallied up through the trend line. Now we've had this nice little correction. And I told Dutch this is probably where the bond market catches a bid. You've got inflation going your way. So it's tough to argue that the Fed, maybe they don't have it at the absolute level that they want it at, but it's going their way. And the components that are sticky are probably never going to come down. Not to the level that prices actually go down. So I think anybody that's actually looking for prices to go down at the grocery store or something like that's not going to happen. What the Fed's looking for is just for the rate of acceleration of prices to get down below or at near 3%, and they're almost there.
So what I'm getting from what you're saying is, we're going to have a little bit of sticky inflation. Prices aren't going to drop, but the reality is we're going to have a pretty good platform for the next 12 months to trade long in some good stocks. If rates are coming down, man, that's right in our sweet spot.
That's right, Des.
And so people need to know that this isn't 2022. We're not fighting that Fed. It's not halfway through 2023 where we're still fighting and trying to figure out what they're going to do. We pretty much know what they're going to do. So let's find some good stuff and put the pedal down, and make some money.
You got it, Dutch. And that, I think, okay, so that's the wonky economic part of how we analyze things, right? And that's a good synopsis of what we just walked through. Now, what Dutch and I do, guys, is unlike a lot of people that engage in that kind of activity, we go and we'll look and say, okay, well, here's your historic analogs that we've shown you about when and where the market, what it does once the Fed actually ends the rate hiking cycle. So we've got the historical illustrations. We've been talking about this breadth thrust that we got at the end of last year that shows you 3, 6, 12 months out. You're almost always up. Okay. And then you look at the charts, and what you really see is kind of some high-level consolidation on the hourly charts in the S&P. You see Microsoft breaking out, okay, to all-time new highs. You got NVIDIA breaking out, okay. You got Amazon looking really strong. Those are probably Dutch and I's 3 favorite mega caps. All those have an AI component. You got ARC that's in a 50% sort of correction from its peak. Be interested to see if it holds its 50-day. The most shorted list is also down 50% from the run up it had. So you've seen a nice pullback in those names. Softies overtaking Apple. Just anecdotally, we've been talking about that. In fact, we predicted that on Apex last year. The play here is that Microsoft is much better positioned than Apple on AI. The one thing that keeps me up at night that I'm watching, Dutch, in Chartland is this Russell 2000 that just can't seem to fully break away from resistance. However, I still think this is what you've got developing in the Russell 2K. So
Z doesn't that doesn't normally happen until the Fed actually starts cutting rates, if my memory serves right.
well, right. So hey, and Powell, this would be like right small caps and these these names that have suffered the most.
Right.
They're probably not going to start really fully participating until we get a little further sign that yeah, that's right. But when you look at the major indexes, the S&P kind of looks like we've broken out here. We're going to kind of start launching up higher on a weekly basis. So that's what the longer term charts are telling you, Dutch. And I think you're seeing it worldwide, man. And you're seeing it in sectors that we haven't seen move in a while. You see it in financials, you see it in healthcare, you see it in Europe. Okay. You see it in India. I'll send a chart to Dutch about like Europe at 3 a.m. on a Saturday. And he'll be like, what the this? Anyway, India, and I'm like, look, man, I'm putting a collage here together for you. Here's Japan breaking out. Okay. So we got all these great looking charts. You want to keep an eye on Bitcoin because I said it's all one trade. So if Bitcoin can consolidate up here, put in some price action, find some support. By the way, I think fundamentally what is happening here, guys, is that all the holders that were in the grayscale GBTC are rotating out of that into the lower cost structure ETFs. And when those Bitcoins run out, and there's more liquidity coming in, then you set up a better price action point. And this is probably where we burn some of this off sideways. But anyway, those are the
sell the news, right? Sell the news, buy the rumor, sell the news.
Well, yeah, I had a chart I didn't include in here, Godfather, but it actually showed when the futures contract got approved and when the futures ETF got approved. Similar kind of phenomenon. So not anything crazy. All right, let's quickly run through the systems, Dutch, and then we'll get to the actual portfolio. I won't spend a lot of time here, guys, but you can see that breadth has been missing since the end of last year. Christmas is when it kind of all started kind of getting weaker. Just the advanced decline line, it just started weak. We've seen this. We haven't broken down yet, which is good, which is more of an indication of consolidation than it is some sort of breakdown. You got a lot of stocks on our top lists here working pretty well. Some of them we traded, some of them we talked about. Many of you probably recognize. Here's ELF, ANET, SMCI, NVIDIA, AMD. Some of these DEC, Pulte, Housing is showing up. Toll Brothers, DR Horton. So just use some usual suspects, but kind of you can see the breadth not great. Over in Trade Triangle Universe, looking at macro and mega caps, what we like to call this, you can see the only index that we have in three triangles are the S&P and the comp. Well, never mind, Dow's there too, but you've got this sort of NVIDIA softy, J&J, Visa. So there's some participation all the way down to Amazon. We've got hundreds. So to Dutch's point, us seeing some rotation into some larger, higher quality mega cap names. Here's your proof pudding right here in the system. We don't just make the stuff up that we say. There's quantitative evidence supporting it right here. So you can see that's where some of the money's been rotating. The other list I got to tell you that's been pretty hot are the names in the 250 on Market Smith. If you look at the top here, you can see it's cybersecurity, which we've been keen on for a while. Palo Alto, Beautiful Weekly, CrowdStrike, Zscaler, QLYS. Here's CyberArk. There's ours. We like this one because of the market cap. Look, 9 billion, versus 100 billion, 68 billion,
handle.
34 billion. So what's that, Godfather?
That's a nice cup and handle, the one that we're in. I mean,
yeah, look, CyberArk's coming out of this long consolidation too. I really like that weekly chart. You can see it's been acting pretty well in the dailies, but
yeah, I think the two that we've got that are acting the best are CyberArk and GitLab GTLB.
Yeah, and hey, that is probably going to be another name, guys, with that not here 9 billion exactly. Busted IPO coming out of 21. So we put all this work down in here. Dutch and I both like that one. Look, sector pretty righteous, 13 and 197. Cybersecurity, I think, was 3. So the 250's been hot. The top 10, 15 names here in the 250 have been really acting well. This Guidewire, AOKT, Intuit, which you guys have probably heard of, Okta, which we've traded.
The Sentinel One looks pretty good too.
Doesn't it? Look, that we came in and out of that one, I think, towards the end of last year, didn't we, Dutch?
Yep.
Yep.
Yes. It was traded, yeah.
And look, it was a really explosive
We made a
opportunity.
we made a call prior to an earnings announcement and we won.
Yeah. So that look, the 3 of 197. So that's kind of one of those hotter sectors. We really like that. The other thing I'd tell you is while biotech broke down, some of the higher quality biotech held up. Vertex, Regeneron, those are $1,000 names. MBIX is one we've traded in the past. But this group you can see really high. ALPN, Twist, those are all acting pretty well. So
We haven't had a time in the last several years where when you actually take your list, your short list, whether it's 100 names or not, and you screen it for 52-week high. How far away is it from the 52-week high? The list is longer today than I've seen it in 3 years.
Yep.
Which means they've got a lot of stocks that are setting up for a breakout, just waiting for a catalyst.
And that's here again. So Dutch, as we do on these calls, and what we try to tell everybody, we start at the top of the funnel with the macro discussion, and then we bring it down a level to looking at the charts, looking at other markets, looking at the correlation between those markets and our stock market. And then finally, guys, we get down to where we are at the point of the spear of analysis, which is, okay, tell us what sectors are working and what the top, stocks within those sectors are. And then how are they setting up? Now, what I'll be looking for now, Dutch, is for the systems to start throwing some more buys. Okay, so right now I'm coming in and I'm only getting a handful of buys. I got a lot of buys in play, but I want to see some new entry signals. Here's a great one on Workday that got fired on Friday. But when all things are systems go, we'll come in here. You can see Workday breaking out. We'll come in and we'll see a lot more buys over here, new signals, new entries coming in, and we'll know over here when the Russell breaks out and goes higher, this breadth will improve. We'll go green here, so that'll be confirmation to get long as well. And at that point, it's a little easier for Dutch and I than it was last week, where you kind of hit these 9-week streak, like we were on, and then you hit a week or two where you've got to trade sideways, and you've got to let those corrections play out and not get too chopped up when they're happening. So as we sit back and kind of wait for confirmation of things to improve, just focus on the winners, focus on the handful of stocks that are working, come through, go through your list, go through the 250, go through the 50, go through, trade triangles, or, go through VectorVest if you're using that, and just anecdotally mark in your head, hey, what's working? Here's Workday in the IBD 50 I just showed you through a buy on Friday. So here's ZS, QLYs. So you kind of know where the action is.
So if you're playing options or something on indexes, the good news is that you've got Microsoft, Meta, you've got NVIDIA,
Salesforce,
you got CRM, Salesforce, you got CRM, you got Amazon, you got Google. All these guys are setting up in there, okay? So the good news is that if we do get a punch through and a follow through instead of a failure at this point, because right now we're kind of at that point where this thing could either fail, come back a little bit, and that really it's a coin flip in my mind of whether that happens or whether it punches through soon.
Dutch, that failure would look something like this, buddy.
Yeah, I wouldn't get too tight on your time frame, because we could get another week or two of a pullback. I don't know, but
that's this scenario, Dutch. I think
Right.
This is a weekly. There's your cup and here's your line. I think this is totally possible.
Right.
And to Dutch's point, he's like, it's a coin toss. I would have said it was a coin. I would have been a coin toss until I saw
That.
an NVIDIA.
Right, right.
That made me think, okay, those are your lead dogs. Amazon. Look, I'm telling you, Dutch and I both are really keen on Amazon here. I think there's about to be a margin explosion.
No, they're
at Amazon. Cash flow is just going to go crazy.
Nobody has figured out how big they're going to be in AI yet.
Well, and Dutch, it's still being confused as this retail thing, and it's all about AWS.
So remember what happened when they caught on to Microsoft as an AI play? I think we could see the same thing here.
That's right. Hey, that's a great
because when they decided, when everybody said, hey, wait a minute, Microsoft's got a huge stake in AI, the stock went up $100.
Look at what a huge run Microsoft has been on, and it really kind of accelerated, off the bottom. You've gone from just about 2 to 4 almost, and Amazon has put in a lot of work here, guys, on the monthly. You can see it clearly on a weekly.
So now if we get a similar move, we go from the 150 to 250 number.
That's right. And so, hey, so Dutch, that's why instead of 50-50, I'm probably more 70-30.
Okay. All right. Let's rock and roll. We got to move.
All right, guys, here we're at. I got our names from Friday, I think, Dutch. So go through them at the top. We've touched on some of them. CyberArk and GitLab, you hit pretty good.
Yeah, those are acting the best, and we went back into GCT on Friday. That's the purple. The purple ones are there. We like Lilly and we like NVO for the GLP-1 weight loss names. Lilly's acting really well, better than NVO right now, but Lilly's acting real well. Expensive stock, but looks like it's ready to just take off again, go up another damn 100 points. I'll tell you what.
Guys, Ken Langolin did an interview. He's a big investor. That's co-founder of Home Depot. He was talking about how these guys are going to be the first $1 trillion pharmaceutical company. They're at 610 now.
So I know we have some people asking about GCT. Let's go back to the list. So GCT, they're asking about GCT. Okay, so here's the deal on this. They announced on December 5th, so I guess we're talking about a March 1st or March 5th kind of time frame on another. I think the stock can move up on that. That looks like a little bit of a flag pattern right there, which is actually quite constructive. That's a viable pattern. 29. Let's talk about growth here. 2019, this company did 122 million total. It's doing that every quarter now, and it did 275 in 2020. It did 414 in 2021. They think that in 2024, this thing's going to do about 679 million. So this is a company that's basically on some kind of rocket ship to $1 billion in revenue.
And Dutch, they've carved out this incredible niche, guys, where they're handling all these packages, a lot of furniture,
cross-border stuff from China,
cross-border furniture trade, and the big guys like Amazon, they don't want it, and they can't handle it efficiently. In fact, they outsource it. So the runway is clear because they're not going to get squeezed out by Amazon and some of the other competitors. Go ahead, Dutch.
Yeah. So the deal here is that there's 2 analysts on the stock. So I'm going to answer a question real quick here. They're lower tier firms. So they're tier 3 firms. I think it's Roth and Aegis. Okay. If Morgan Stanley and Goldman Sachs and JP Morgan won't take you public, that's the top tier firms. And that's not a full list, but that's what you're looking at when you see a top tier firm. Then you drop down to sort of a second tier firm, and this is arguable, but maybe Powell, you can help me out. You got RBC maybe, and maybe some other guys do you know, Powell, any names?
How about Baird?
Yeah, so you got some guys out there that are in a second tier that you would go to take yourself public and stuff. And when you go public, of course, you've got the analyst research coverage comes with you. Okay. So then if those guys won't take you out, then basically you got a bunch of smaller third tier firms that'll take you out. And then below them is, they don't even call it a fourth tier. There's just sort of the real scary guys. But So you got two guys putting research on here. You got a company that's rocketing to $1 billion in sales. We don't have any inside information, but we think that there's probably 3 or 4 firms that are looking at putting research on these guys between now and who knows when, maybe the next earnings announcement. And all we need is 1 or 2 mid-tier or 1 top-tier firm to drop in on this thing. And it's going to move the stock like crazy.
Can you imagine what it would do if Goldman came out and put a buy on it?
Yeah, and the thing is, that can happen.
I know.
Because they can sit there and look at this thing and say, you know what? I mean, all it takes is an analyst who says, I got to have this in my quiver of stocks that I follow, or a banker who says, hey, man, someone's going to either buy these guys or they're going to do a big deal, and I want that fee, man. And so either one of those things, I can see it coming. I mean, when we were working on the banking side, we'd look at a company like this, we'd be in there already, and people would be calling like, Google or something and saying, hey, have you seen these guys? Do you want to do a deal here? Can I make a call for you? That kind of stuff. So
look for 1860 as some sort of significant support. That was a previous peak.
Yeah.
So you're right here at 20.
That's all I got on that one. Okay, what else?
I think we've just got a handful left, man. We've talked about FTO and Lily. FTNT guys is
so you kind of go back to ELF and LULU again. They were big winners last year. It looks like they want to follow through this year, and keep on going. So just because the calendar turned over doesn't mean the stock size is gonna, we're gonna have a whole bunch of different stocks. So sometimes the same stock's gonna work again.
I was talking with my wife about ELF.
Yeah.
Just the other week, and
what you said?
Great products. So,
really?
Yeah, it's a great company. I think as we've told you guys, that's probably one you could maybe put into a longer term holding situation. Here's Lulu. Pull back. We're right at trend line. Hopefully we'll catch a bid here there. And
It was great to hear Dutch talk about that on Liz, huh? The Lulu pants.
Yeah, that's right.
Liz likes the Lulus.
Here was FTNT. We got a buy signal a few sessions ago there.
It's like Dutch.
Yeah.
She did.
I think she's married to a dentist.
She was there in Vegas with Dutch.
I think, okay, so I found something out, like all these
My bad. That was my fault.
all these female hosts are married to like New York dentists. Those guys must just coin it, right? If you're a dentist in New York, man, you're rocking.
Here's FTNT, guys. That's part of that cybersecurity crowd. This trade has lagged. You can see we've been going sideways. They reported a bad earnings report, or at least it was perceived that way a few quarters ago. Really hit the stock hard, but it's coming back nicely. This company is a great company, and the founder owns a huge block of stock. So this is like a founder-led company. I told Dutch this one might play catch-up. If you look at it on a monthly basis, it looks great. Great return on equity, great margins. In fact, some of the best margin return on equity in space. So FTNT looks like a winner.
So you can put this in context. Okay, this is what Trader Z does. Okay, he's going to find a stock like that, and it's not going to move the next day, and it might not move this week, but when it moves, it's going to go up like 20 points.
Yeah,
it'll explode in a day. He finds these explosive situations that they just it's happened so many times in the last 4 years that it's just this is starting to smell like one of those.
Absolutely. I think Z, you were pushing this one. Well, not pushing, but you and me were talking about. I forgot which one I liked, and then you brought me to this one last year, maybe June of last year.
Yeah, look, this is a great. We've been very bullish on a couple of sectors since we started Carnivore, and one of them has been cybersecurity. And I think, the crowd strikes and the Z-scalers and the
That's right. I think Z-scaler was broken when I was asking about it. And that's when I think you brought up Powell and Fort.
Even CyberArk and Sentinel, these are all great companies, great stocks. Add Fortinet to the list. That's another great company, great stock. All right, Dutch, we talked about Amazon. Let's do Qualcomm.
All right, so
Qualcomm and PDD.
Qualcomm is probably the cheapest chip stock on the planet. It's got like an 8 PE. All right. That's cheaper than SMCI when we found that at 85. So, I don't know. It's got a good setup. We know that they're turning that ship, and there's a lot of young, good, powerful dudes in there now. I would expect it just to follow through. It's not going to be one that just goes up 50 or $100 in a day. But it also ain't going to hurt you. It's not going to blow up on you. This is a real company. So
what I love about this chart, Dutch, on a monthly basis is you can see how this thing is. Look, 100 goes all the way back to 99. You've broken through that peak. Okay, now we've come up off that 100 mark, run it to 140. This thing's going to 200. Okay, and it's really part of a fundamental story that involves a feud with Apple that stretched years, that is now resolved, and the company has a clear runway to sort of start growing again. So I'm with you, Dutch. This one's not going to move 20 points in a day, but this is one that you could ride in and out of for the next 100 points.
Yep.
So, and look,
right.
You're going to see Dutch do some of that, guys, where, maybe it is $140, $200 stock or even higher like Lululemon. But if you're consistently coming in and out of these things and making 5, 7, 8, 9, 10%, there's nothing wrong with that, particularly if that's what's working. Because they're also, quite frankly, easier to get in and out of. But I think PDD was all we really had left. For those that don't know, this is Temu. This is probably the only stock in China worth owning. It's also surpassed Alibaba in market cap. Don't know about the business model's long-term sustainability, but what they're doing right now is working. If you haven't used the app, you should probably experiment with it just to get to know the app. I know Godfather's been in PDD for a while.
Yeah.
We don't trade a lot of Chinese stocks, won't trade a lot of Chinese stocks, but this is one that looks pretty interesting, has kind of a good fundamental story behind it. So
the other thing that's happening is there is a lot of chatter about China dropping rates pretty hard, which should help their stocks.
And think about, here again, to what Dutch just said, what do? We hear that, we think, let's find the best stock in the Chinese market right now. What's the hottest thing happening over there? Well, it's Temu. You got this stock that's been up here around 147 for a while. Maybe we break out and catch that big run that comes out of that stimulus. I think that was it, Dutchman. Yep. All right. Hey, Connor.
Questions?
We're done.
Questions?
You're muted. We can't hear you, Connor.
Sorry, guys. Before we jump in, just quick insight from Bonnie. I want to get your thoughts on Z and Dutch. PDD and QCOM, short term, not as good as others. Per Vantage Point AI stuff. Lulu also down per Vantage Point.
Thanks,
Yeah.
Mike.
Let me take a look.
Yeah, I would say no, I don't necessarily disagree with you. You can see it on those charts that we just pulled up. A couple of tough trading days the last couple of weeks. I don't necessarily think I see it as much in Qualcomm as I might in Lulu. But that's because of what I see happening in semis versus, retail. You can see this looks pretty constructed to me on the 60-minute. I see that weakness she's describing here on the 60-minute chart. With Lulu, kind of been this straight line down. Look, that stock had a hell of a run. You're right back down to moving average 2 weeks off. Like I said, I see what the computer's telling you for sure.
No, she's right. She's right on Lulu. The only play there is that the rate of change is bottomed out, but the MACD is still screaming down, and the RSI is screaming down. So she's right about that one. Let me check Qualcomm over here. I mean, we're playing for a reversal really with that. If it doesn't happen, don't be surprised.
With Qualcomm, I would say too, this 140 mark is my, that's my mark. The price should move beyond that point from here if we're right. And I would hope for the relative strength to move up on Qualcomm. Lulu, look, in some ways, Bonnie, this is where I would get to, and this is quite frankly some of the big difference between Dutch and I. A lot of it's time frame. Short-term basis, you're probably right. longer term time frame, if I was trading more probably my time frame, I would say Lululemon just broke out, particularly like on a monthly chart, and we're just correcting a 1, 2, 3, 4, 5, 6, 7, 8 month run. So that that might be a month or two.
I think if the tech market holds, Qualcomm is going to make the relative strength is going to fly here, and we're going to have ourselves a nice little run up to about 150, 148, 150, somewhere in the March, April timeframe. But it looks better than Lulu right now on a short-term basis.
Awesome commentary, y'all. So
Yeah, all those are short term.
Right.
Just
Vantage point's 2 to 3 days out typically, right, Bonnie?
yes. Well, so they have a short term, medium term, and long term indicators. Lulu has actually crossed below the long predictive, so that one actually looks a little bit more dangerous to me.
Yeah.
So, one way you could play it is look for the bull flag that Dutch mentioned just a bit ago and wait for it to break above the trend line, bull flag down. So
I know there's lots of dangerous women running around that store.
that could be.
I couldn't help it.
Yeah.
I'm terrible.
well
Or you
said.
can hedge. You can always hedge with options, right?
Right.
Yeah.
That's right.
So we'll get into it, y'all. We got really good questions to chat today. You tell us a hardcore audience here. I think, Dutch, do you feel like you covered Doug B's question here on the
Yep.
firm school?
Yep.
Anonymous ask, what about real estate market? How will rate cuts affect that area?
Real
I don't-
estate is
I don't buy real estate.
Location, guys. Depends on what market you're in. The market that's in trouble is commercial office. Clearly in major metropolitan markets, you're seeing some of those properties exchange hands at 40, 50, 60% discount to previous transactions. I post them occasionally on Twitter. That's where I see the most carnage. Outside of that, I see some struggling, triple net retail stuff, maybe in some struggling, concepts. But all in all, I think a lot of commercial real estate holders, guys, are not over levered and are going to just ride out the storm. So I see a risk of interest rate, sort of roll, if you will, for some of these guys. So they've got some debt coming due. It's going to be problematic at current rates.
Whose problem is it?
It's probably partially the banks.
It's going to be the bank's problem.
It's probably partially the owners.
And by the way, I'm not crying one tear for the commercial guys who've been banging us for $675 a foot in rent in Newport Beach for 100 fucking years. Excuse me.
That's right. So look, these guys, I would say, and the other thing I would tell you, I think a lot of the REITs themselves, it looks like the damage is done.
Yeah.
And I would even say even things like the mortgage REITs, which are the most dangerous of all, they look like they bottomed. So my answer would be now's the workout period where some of the problems in commercial real estate get dealt with at the bank level and at the property level, and the world just kind of keeps turning. I think the other thing you'll see is some of that property get, either demolished and repositioned or just.
Well, the beautiful thing about some of these real estate owners is that, you know what? They're smart, man. They're entrepreneurial. They figure out how to repurpose this stuff. You see things like some of these retail store front, strip malls, whatever. All of a sudden you see different kind of things going in there. You see, churches go in. You see Amazon distribution centers go into some of these big boxes that are empty. It's kind of interesting that it's kind of like these guys, you see that and you kind of go, oh, that was smart.
How about Dutch? You'll read things like, I read this guy talking about he runs a portfolio of industrial warehouses around Long Beach, and he's like, man, business is booming. He's like, everything I got's 100% occupied. I got no room for nothing. I could raise my rents. These guys wouldn't even blink, and so it's just all location. You can find yourself in a bad market somewhere, but a lot of these guys are not over levered this cycle. And when you're not over levered, you got a lot of flexibility like that.
Yeah, it's like people who say, hey, my kid's going to Auburn. I'm going to buy some apartment units there and just sit on them.
That multifamily has cooled because
You know what I mean?
you've seen a lot of people and a lot of capital.
You got a college town, man. It ain't ever gonna go away, right?
A lot of capital flooded into multifamily. There's been a big build out, but that was just the market at work. So here again, I think that
or you can do
the
what
worst is behind us.
you can do what Trader Z does is just make sure you buy some raw land very far away from the cities with water, and then get a bunker in there with lots of ammo.
True story. I did know a guy who his investment philosophy was he used to drive up the interstate until he got to where there was nothing on the interstate exits anymore.
Yeah.
And he started buying the land up there and he would just sit on it. That was his whole strategy. And it worked brilliantly for like 40 years. So real estate can be something the guys over a long enough time frame, you can like make up for any mistakes that you make.
It's a rich man's game, though.
It is. Hey, it's a rich man's game. It's an illiquid game. In fact, I just got into a snark battle with a guy on Twitter about this, saying, look, it's what you're talking about is locked up and nobody's got access to it. What we're talking about, you can open up a damn Robinhood account with $5,000 and get in the game. Okay. That's the difference.
If you're going into real estate, you better have your cash flow set first.
Yeah.
That's right.
I mean, if you're looking for real estate to give you cash flow off the bat, forget it.
All right, let's get off that real estate thing. What's next?
All right. So, pardon me, y'all. Here we go. Thanks, Thomas. From Chuck L. IWM has a lot of small banks in there. Given the pressure on small banks, do you really think IWM breaks out?
Great question.
That's for you, Z.
Look, I think that the reason why that the banks might have a shot here is that it's just time. I mean, we're looking at a chart here that goes back all the way to 2019. So we've gone sideways for quite some time. I would also argue that banks like Zion already have kind of the worst behind them. And the old range was, 50, 60. I don't see why they can't get back to that level. I think when you look at the big banks, JP Morgan reversed last week.
US Bank's a good one. I mean, they're a middle one. They don't know, are they a big bank? Are they a regional,
That's right. And a lot of these banks are trading 10 times.
Yeah.
Less than 10 times. So you're not really paying much. I just think this whole sector's been regulated to a utility. So what I don't really have a lot of expectation for this to go booming higher. Here's the XLF.
Well, they are a utility. Look, I mean, that's where the government used them. They are a utility. Absolutely.
Yeah, that's the problem with them. They quit. The government has gotten so involved in them now that you can't make any money in banks, really.
That's right. So regulated to utility status, and so it's really just something that we watch. But I do think you could see these go back up to the higher end part of this range, just with prices of assets. That carry you back up, in the IWM, which looks very similar to this, right?
Yeah.
And here's your target on the IWM, right back to the new high. So, I would say, good question. Banks would be a sector I would avoid investing or trading in directly. You won't see us do a lot of it, if any at all. But like small caps, I think in the right conditions, they could run up to new highs because we've been going sideways for the better part of 5 years. That's about it.
Thanks,
Yeah.
guys. I'll have to start with Roger on this next one from Dave G. He asked about CCJ. He's been in it since a while back and says it's been a great pick. Thank you. But with the uranium shortage, how much more do you see it going up, or is it time to rotate out of it and look at another company in the uranium industry? Roger, I'm curious to answer that question, but also could you give us a little context for those who don't know about uranium shortage and what the latest on it is?
The headline came out on Friday that a big producer was saying that they were having trouble meeting all of the demand, and that's what sent uranium stocks up, 10% in some cases. I did see it pop up. I saw it too late. I didn't get in it. I sent a note to Dutch about it popping, and he said, yeah, missed it. And then you have that dilemma of, do I hop in now after a big move? And my feeling is, if first of all, congrats for you staying in CCJ. You
Absolutely.
have more patience than I do.
Yep.
But it's coming. I think you're playing it correctly. I think you're taking a long-term approach. The shortage is real. Trader Z has said on many a call that something's going on with uranium that's driving up prices and driving up demand. There's another announcement that there's going to be some building of uranium nuclear plants, and so that's adding more to the demand equation. So if you've seem to have patience. For me, I'm going to take a wait and see approach. I think a big move in one day kind of scares me from entering. So I'd like to see it pull back a little bit. What's going on there? And I think you're smart to play it the way you're playing it.
So Roger, definitely, you said some really smart things. One, tough to buy here. What I would say is you let this correct like it does from time to time and stop your entry. We've been bullish uranium for a while, and we think there are several factors behind this move that are longer term in nature and will be continuous. So the renaissance in nuclear appears to be real and appears to be sort of growing louder in terms of it being the answer to our needs for future electricity. And the reactors that are potentially much smaller and much safer and much more efficient than anything that's ever been built before are kind of being pushed forward. So I was in Wyoming not too many years ago, and there was a company that was preparing to build some smaller micro reactors out in Wyoming. And so you're seeing that technology come to the forefront now. So I think CCJ and some others in the space like UEC, we've traded. You can see, God, Dutch, we were probably trading USC at like
3.5.
Yeah.
Well,
Wow.
I was just looking back over the CCJ charts, and we did a trade there at 27.65 and hit the target at 34.25 or 34.75. We went out of it. We went back in at 43.78, and it just blew the doors off at 47.35, which was the target. We weren't in it, but the volume that came in, hell, we haven't seen that kind of volume in 2 years. That it was the last week or so. So that's definitely a sea change, okay? Which means, it could pull back on us here. What, 47, 46? But this is one of those stocks that I think I said it 2 years ago to Trader Z. Every single time I leave it, I kind of regret it. It just keeps on working.
So back in August of 22, I said uranium may be the greatest commodity investment opportunity of the 21st century. So there was my level of bullishness at the time, and I still believe that. So if you're looking for the one energy play I'd be excited about, this would probably be it for the longer term time frame. Great question. I would say if you've been in it this long and been holding, just slide your stop up and hold it some more. And at some point, you might want to take some of the chips off the table and just let the profits run.
These discussions are getting so good, guys. Thank you. All right. From Jay, what role should we allow fundamentals to play in stock selection? Using GCT as an example, though the stock seems to have great potential, share float is disproportionately small and short interest very high, in excess of 28%. But Carnivore selected it. So what supported the belief that it's a great company and that this stock could grow by multiples? The fundamentals don't seem to support it to him.
Well, I don't know how to answer all of that, but I think the way I'll answer it is, if you're trading a stock, then the fundamentals are, so what? I mean, you want to have the fundamentals to kind of protect you so that the stock doesn't go from 20 to $1 because it's, you know, a piece of garbage.
Someone pulled the rug out.
Yeah, so you want to have some fundamentals kind of backing up. And that's one of the things that Vector Nostradamus does over and over and over again is it just screens out the garbage so that we're not trading with garbage. We're really trading with, you know, 99% of the time we got to have something that's got some fundamentals in it. So we bring stuff up fundamentally about revenue growth and profitability and all that stuff so that people who are looking at, hey, I got 3 different accounts, I got kids accounts, I got retirement accounts, I got trading accounts. Maybe a retirement account is one where you park something like that and you say, I'm just not going to really worry about the volatility on it. In the trading account, yeah, you worry about it. You watch it, you got to have stops in there and and hopefully protect yourself from pullbacks. If I had a very tight trailing stop on that stock when it hit 26 and change and turned around and started heading south, it probably would have pulled me out at the high 24s instead of going all the way to like 17 or something.
So the longer your time frame, the more fundamentals.
Oh, the other thing too is you saw in one of the wraps, we started putting a couple of things in there about we're going to have another bunch of great sayings from great traders, kind of a thing or whatever. And one of the traders I looked at, what did he say? He said that first of all, I mean, you guys really responded great to that. You guys kind of like that, and a lot of that stuff was helpful. But he said that the fundamentals, you know, on a trade when he's doing shorter term trades, he doesn't really bother with that much. Plus, he's also willing to change his mind, you know, almost instantaneously. If he's wrong on a trade, he'll get out and even go and take the other side of the trade. Now, obviously, you can get whipsawed pretty bad if you don't know what you're doing there. But anyway, that's and he said one of the things I was looking at. This is Paul Tudor Jones. He goes, everybody worries about how much money they're going to make potentially. He said if people would spend as much time on risk management and risk control as they do, he spends 90% of his time, he says, on risk management and risk control. Because he says the profits will take care of themselves. If I'm on the right side of a trade, I'm going to drive into it. Okay, I'm gonna start pouring money into a trade that I've got going the right way. What I spend 90% of my time looking at is whether or not I'm too over levered or too far out on a trade, and I haven't protected myself with stops or whatever.
So to answer your question, longer time frames, more fundamentals, shorter time frames, less to no fundamentals. If you'll notice in all our screening processes, fundamentals are built into them, but don't drive them. And the one fundamental process that we back out most of the time, except for 1 or 2 of the screens, is valuation. And finally, the idea of not trading fundamentally sound companies that are growing and that the market's kind of confirming that growth through price action is, I don't know, you're just, why eliminate that variable? I know a lot of people that just trade price action, which is fine, and some of them are really good at it. But I think if you eliminate fundamentals, it was just one more data point that you could have used. Now, in the case of GCT, I actually think this is a good company with a good story. I think they're positioned in a niche that is probably going to lead to a lot of growth. And if I were not, you know, say you made some money on the first round of, you know, the stock, and you had taken a small position and you're down on it a little bit, well, either just decide to yourself mentally, I'm a trader, I'm out, take the loss, or say, no, I bought this, it's a decent company, I'm going to hold to see if it turns into something else because I've got that time frame. But you got to commit to one to the other. Don't get in a habit of doing that, though. And I think that's kind of what Dutch is really saying is like, look, this is where people have a hard time incorporating fundamentals into their analysis. You read something, you get all fired up about a company, and then the stock goes down, and you're like, well, I don't want to sell it. Well, look, it's strong opinions loosely held. Like you look for these ideas, these things, but just because you have it, you think doesn't mean you can't just let it go and move on to the next one. So incorporate the fundamentals into your analysis. Just don't get bogged down in them, and certainly don't make your trading decisions based off valuation. Because if you do, you're going to end up picking up a bunch of crap up off the bottom.
Can I share what I do in these? Because because like like a lot of people that read the raps and everything and hear on the weekly calls, we can hear the passion in Z, we can hear it in Dutch. So it's hard to leave some of these because we're like, yeah, we're all into all of that. So when we're done, let's take Duolingo, for example, or GCT, if we're done trading it, but I do think that it's going to be long-term great. And I want to keep a portion of that. I'm mark to market anyways in my trading account. I'll sell it off. Like GCT was at a loss when we went in, like many people, but I agreed with what you said. So I've got 300, 400 shares, nothing big, but I just moved it over to my IRA or, into Fidelity where I keep the long stuff where I don't even know the password anymore. And Duolingo and Elf, and those have all just been in there in a smaller portion and they've been great.
So good question. And I think you'll notice, we do analyze all these time frames. The trading is shorter term. So we're going to be out based on price action, but it doesn't keep us from saying, hey, cybersecurity is a great sector or biotech's going to run in 2024. So you gotta, and look, we got traders and people on these calls that are professionals and they're managing other people's money, or they're doing some long-term investing in some accounts and they're managing. All right. You gotta incorporate all this information we're sharing with you. That's part of your journey as being a trader and investor.
Sorry.
Dutch is there for you for timing and for hot, trades and activity for short-term price action. And that's what dominates, his process and risk management, as he just said. So don't get bogged down if we talk about some stock like we love it and then we sell it. It's just part of the game, guys. It's like, I love, NVIDIA. It wasn't the time to be in it for, the last 6 months.
And by the way, that's getting back to valuations again and screening for like PEs and things like that. And I think I put it in the last wrap or it's coming out in the next one. I can never remember which one I'm on, but if you were screening for low PEs or whatever, you would have never gotten into NVIDIA ever. And you'd have missed the greatest stock, the last 5 years. And that's because it has always looked expensive for the last 5 years. So
and it's still cheap. Hey, look, there's your peg right there. Peg right there. It's cheaper than all the other mega cap techs.
right. So you're sitting there saying, okay, I'm going to be what is it you used to say to me, traders? You used to tell me value investors are right like 1 or 2 years out of every 10.
That's right.
And growth, and that's why he would rather be a growth investor, because when you've got revenue growing at 30, 50, or 100% a year with gross margin and you're firing all cylinders, you might not enter that stock at the absolute perfect time. But that growth is going to make up for a whole lot of ills on your timing potentially.
So the last 10 years, tech, communication services, look at your low PE sectors, utilities, staples, energy, healthcare, financials, half the returns. That's why we focus so much on these names. Look, here are your best performing stocks. Most of these are tech names.
I got to go in 15 minutes to go. So if we got any more questions, I got to go pick up an AK-47.
Uh-huh.
That I did see. That's nice. I'm looking forward to
Yeah,
it.
it's a good one.
So then let me ask one that's for, sorry. Let's just go to the AC then before you go, Dutch. AC says, don't rates have to come down since about 40% of the treasury debt needs to be refinanced in the next 2 years. Am I correct on those numbers? Otherwise, we have the mother of all financial crises, given a 1.7 trillion government budget deficit. And, he goes on, but.
Well, yeah, the only way that they can make up for that, if they don't bring rates down, is they got I'm not sure whether this is true or not, but we got 86,000 IRS agents with guns that are coming to your house, right?
The problem with that, Dutch, is you could tax us all 100% of every dime we make, and they still couldn't balance the budget. So yeah, great question.
The other
I don't
problem
know the
is
exact interest. I don't know what the exact role is, but yes,
we
think rates are coming down.
You better not go to Godfather's house and knock on his.
Not either.
Wow. All right. What's next?
Good on. Tim asks he has a question that we should make a dedicated video on, so I'm going to skip that. Then he goes on to say, though, what industry historically does well during the winter to early spring? and this is a good question for the group because we get questions about seasonality all the time. So starting with Z on the original question on winter to early spring, but then let's open up the group for anything you guys notice seasonality wise in your trading strategy. Be great.
So I tell you, I do look at some seasonal stuff, but it's usually for the broader market, not necessarily on sectors. I tell you, my approach to that, and I think Dutch probably is the same. Instead of forcing some sort of a historical analog or seasonality analysis on what sectors are working, I just go to the market and let the market actually tell me what sectors are working.
Good advice.
And that kind of is our philosophy. Like, and look, I think everybody goes wrong. This is how they go wrong in their fundamental analysis, right? They find something and they fixate on a sector in a stock fundamentally, and they say, okay, that's what I like. Versus our approach is really more to say, what's working in the market, and then I'll form my fundamental view around that conceptually. And so when you're like, okay, well, what sectors, for spring to, or winter to spring? Well, right now, I would say these sectors. Okay. Because and by the way, here's somebody was asking about banks earlier. Here's another reason why I think banks could break out of that. I got Midwest, Northeast.
Because they're moving up the line.
Because they're moving up, man. That's why.
Moving
So
up.
to answer your question, why do I believe that? Because the market is saying that quantitatively.
And you know what? If you pour over that specific chart and you look for the thing that was ranked 50th and it's now ranked 27th, and then the next week it's ranked 18th, that's where you see the trend. Now, I told you guys before that back in the day when Trader Z and I first met, we sat there and talked about how the NASDAQ 100, we wanted to put together a software program that showed us the stocks that were down low in that 100 that were starting to move up. We wanted to see that early move and see maybe a couple of weeks or 3 weeks of movement up the ladder of the NASDAQ 100. We were going to use the NASDAQ 100 as our entire universe, and we were going to run portfolios right on that. But we were going to find the ones that were moving up the ladder instead of just buying the top 7, which are basically ones that are going to come down the ladder maybe, right? So we wanted to find the ones that were going to become the next top 20 in that group. So we wrote some.
Look to that effect. Look at that medical biomed call that we made at the end of last year.
86.29 to 4. How about that? See, that's amazing, right? So if you want to look at the next group coming, you're going to want to look at things like, down lower that are,
I like this computer networking that's gone from 115 to
there you go.
45.
That's nice. That's a good one. That looks good.
And
Let's
guys,
dive in there.
That's right. So look, this is part of, instead of forcing your outlook on the market, let the market tell you what's working.
And I've got a really kind of almost spiritual way of describing that. You don't go out into the world and try to push your mental version of what the world should be. You go into the world with your palms up and you say, tell me where I should be going. Tell me where I can be of best use. Tell me where my capital can be of best use. And so you ask the market, because it's way more powerful than any of us. Okay. You ask the market where to go. You don't tell the market, oh man, I need to be in office supplies. That's the best. That's going to be a big deal. The market might doesn't care what you think. It really doesn't care.
Never force a trade, right, Dutch?
You can't force it, man. Every time you do, you end up regretting it, right?
Yeah.
It's part of what we think the process of using all these screens does, guys, is it allows the market to bring to you what is working so that you're not having to impose your view of what should be working. And listen, guys, if you can do anything, if we teach you anything at Carnivore, this is it. I'm going to give it to you in like 15 seconds. Stay out of the market. when there's trouble and the trends are down, the Fed's, pushing rates up, that type of thing. When the market's going your way, find the best sectors and the hottest stocks within those sectors, and then look for consolidation periods and buy those stocks in those consolidation periods. You can figure that out right there. You'll make a lot of money as a trader and investor. And you can do that on any time frame. You can do that on a daily time frame. You can do that on a weekly time frame. But we're going to be here to help you find those stocks that are moving, because there's a lot of noise out there, and there's a lot of blinking lights, and there's a lot of systems to filter through. But we think we have a pretty good process to whittling some of this down for you.
Love that. Thank you, Z. Thank you, everybody. Couple more, y'all. And Dutch, if you run out of time, feel free to hop off. From Tim again, he says, what do you think about PBR as a Brazilian energy stock? He says he doubts it would make the cut as a carnivore stock, but he's curious what your reaction is to it.
So I got to tell you, one of the things I'm seeing is a lot of action in Latin American stocks that I like in general. So I don't know specific fundamentals on PBR, but I will tell you, I see a lot of good looking charts in Latin America. And I'll be honest, I see a lot of good price action in emerging market stocks.
India.
Japan, and then that's not emerging market, but I would just say that I'm about as excited as what I see happening. Not that we're going to trade it, but just as an indicator of a positive backdrop for equities. I look, if things like PBR and other Brazilian names have performed really well. The blue chip name in that space to take advantage of that sector of the world is MELI.
Yeah.
Which is at a new high.
I have that on my watch list. That one just seems it seems like it should have a little bit of a pullback, don't you think?
Look, great earnings just came out. I mean, you don't necessarily want to buy here after that huge candle, but great company. It's kind of the Amazon of South America. So look, PBR, don't know the specifics there. I would say it's a good looking chart, like a lot of these other names I've seen in the space.
Appreciate the question, Tim. Thank you, Z. Thank you, Godfather.
Yes, sir.
And last one from Steve G in LA. He says small reactors equal SMR, which has been getting hit pretty hard lately. Is it worth looking at? Wait, or is there a better play in the small reactor space?
Jeez.
I am not aware of one. And this is where you get into the conundrum of great idea, limited options to play in listed equities.
Yes.
Happens all the time.
This is the stuff I used to play with before going to the first academy. Yes.
Yeah. This gets back to the idea of, look, when you're looking at that, you kind of have to say, man, I should have just bought UEC.
That's what he used to do. He used to do them the whole time. He's like, look at this and look at this. And it took, I don't know. That's that training right there. That's what you see.
Yeah, man. And that gets back to
took me a while.
losing. And look, man, I did this for years where it's like, oh, the smart reactors are way cooler.
And now he's right. I mean,
they are, but so that's I would here again, when you get this idea on uranium or something, or like nuclear, the next step is to find something that's actually working. And I think here again, guys, this is where people go wrong. They look at a chart and they're like, man, I want to buy a chart of something that's been going down, and then I'm going to buy it and it's going to start going out. No, buy something that has been going up. Here again, if I could teach anything in these things, it's like buy charts that are going up towards the right-hand corner, and you will do much better. And so that would be, hey, look, if you want to get in uranium, you're probably better off here. Although that, if you just want to own the actual physical, this is your play, that Sprott fund that just directly owns the actual uranium itself. Look at that run.
Look at that. Wow.
We posted this not too long ago, guys, that this was about to break out, but we just don't always trade it. I mean, look, this is one of those things. It's kind of a small market, little bitty thing.
I was gonna say the volume. The
volume's terrible.
The volume is what would get. We would do that as a carnivore. I mean, I would imagine that would be something we could get nasty.
CCJ was the cleanest because here again, you had the volume to come in and out of. Great question.
Good questions, guys. That was it from the Q&A on the participant side, and then quick one from me before we adjourn today is a quick question for Roger and Godfather. I know you guys have essentially you compartmentalize your investments and what you do, and you have a few different trading strategies you employ at a time with different amounts of assets. What do you guys have going on in longer term space, or is there anything else in short-term, mid-term that maybe are not carnivore stocks, but for people who's playing other spaces, what are you guys doing with your time outside the carnivore trades?
Go ahead, Roger.
I'll go first.
Yes, sir.
Short term, I'm playing the weather effect right now with natural gas stocks. It's very, very short term, but it's 25 degrees here in Houston right now, which is, everybody's got their down jackets on. So, it's a big cold snap for most of the country. Natural gas prices are going up. Long and a couple of them. Boyle is one of them. That's a little kind of funky ETF, so I've got very tight stops on that one. And then there's another, Boyle is a leverage one. It's 2-to-1. So that one moves violently. So that's the short term. Long term, I'm in the big tech stocks. Most of it is Microsoft, which I think is going to keep riding up. Also
That's a beautiful chart.
and yeah, that really is. It's hard to argue with. Amazon is also a long position I have, and I'm looking, on a 6 month to a year horizon for that. So that's about it.
That move in natural gas, guys, has been really explosive. And you can see you went from 220 to 3 really quick. This is a notoriously volatile commodity.
Yeah.
And highly seasonally impacted. And also know that Roger is a energy guy by trade. So when you go into something like Boyle, look at that probably more as a trade than an investment.
Look
Yeah.
where it was a year ago.
Zoom out, Roger, to blow your mind, right? Just look at it on a monthly and go back about. I mean, this was like,
Oh, good God.
look, anytime you get these levered commodity plays, there's all this roll costs with the futures exposure, and it just eats into the NAV over time. You got to be real careful with these things.
Yeah.
So
No, it's a day trade.
That's right. That's what I meant by just keep them short.
Yeah.
If you want to get into something fundamentally in gas, Roger, I've always liked the LNG, story. But quite frankly, what's working right now are the coal names.
Yeah.
Yep.
Number one sector.
Yep. We don't trade it a lot because of the limited liquidity, but man, it's been on fire, and you've been able to make some money. The other sector I would say I'd point out, guys, I think that's setting up here, beverages. I think Monster looks pretty interesting here. 59, maybe up to in the 70s. You can see that one showing up here. Celsius acting pretty well. We talked about that when we were talking about Celsius long ago, guys.
Mhm.
I got them all over. I mean, I'm completely addicted. There it is.
And the other one in that
Thanks,
space,
Z.
yeah, Cocoa looks like it maybe found a bottom here around 22-3 where it does. That beverage is non-alcoholic. You can see 9 on 197. So interesting stuff happened there. All right, Connor, that's it for me, buddy.
Yeah,
Well done, Godfather, your answer.
yeah, no problem. So for me, a lot of my shorter term things mirror carnivore. Like I said, some of the things that I've fallen in love with, I've switched over. Some of the ones that I do like. One of the ones that I will play, it's not quite seasonal, but I'll look at what movies are upcoming, because that they actually write what movies are coming out years in advance. People don't know it. But like something like Marvel, I've done really well trading Marvel before we knew that trailers were coming out for big movies, right? We know when the next universe ones are coming out 3, 4, 5 years in advance. But so that's a big one that I like to do, any of those kind of things. Royal Caribbean, I absolutely love. They're getting ready to break out. I love them, been them for a while. Uber, another one that I just absolutely love. Those are good ones. Those are all, unfortunately, in my son's trading account. So, and another one that's in there is SES, is Semiconductor Bull. I bought it when Dutch says if you can get it at 13, never sell it. And I forgot his password to his account. Now it's up a couple 100%. Now I can't sell the dang thing. So, those are, yeah.
And then since we've gotten back now, Powell, we were just talking about official carnivore trades. Conversation ended. Outside of that, what are you doing? What are you seeing either in short-term timeframes, long-term timeframes? How are you? What's preoccupying your time with your investments?
You talking about where I'm getting ideas or?
Get an idea of just what you're doing. Like Roger was talking about some natural gas plays, Godfather was talking about Royal Caribbean, and yeah.
Oh, I
Yeah.
forgot Data Dog. That was a Powell pick that I'm in.
Powell, you've got a lot of people that you have to do some longer term stuff with, right?
Not anymore. I used to, but you know, I'm when we sold Bradford and in '98 or whatever it was, you know, I've got a few people that won't let me go, but other than that, I'm not. You know, at one time I had like I don't know 960 or 1,000 accounts or something like that. It was crazy.
What's your typical hold period now? Is it pretty similar to what we've got, or are you coming in and out of stuff at a different pace?
I got several different accounts that I kind of do different things in. I've got obviously a longer term account that my holding period may be 3 to 5 years in that thing. But then I've got a kind of an intermediate term account where I'm looking at 1 to 2 years, and then I got a short term trade account which I could be looking at 1 to 2 hours. But
I think that's a great way to divvy it up. And
That's
that's
what
something
break it down.
Godfather and I had talked about too in the past about having different accounts.
That's why I've done that. Exactly. They're
I-
completely different.
I think there are a lot of people that would probably benefit the most from having an intermediate to a long-term type account because they can't. Most people, I think a lot of people, or I know a lot of people got a lot of IRA money and people, you know, in their late 40s, early 50s, and they don't know what to do with it, and they don't know. You know, they don't have a broker they really like, and they're trying to do it themselves, but they can't. They're still working, so they can't do the short term stuff. And so I think they you know, I know at Interstate, and I guess this is what got me going in it. In when I started in '81 at Interstate, we came up with this thing called a model stock portfolio, and we would take $100,000. It was built for $100,000 account back then. And we would come up with ideas that were good fundamentally and had growth and obviously the technicals were good. And then we would create, you know, they would put it out and say, okay, we're going to buy 1,000 XYZ, and here's why. And so that all the brokers would get on the phone, and a lot of accounts followed that model portfolio, and it did real well. And I think if you set yourself up and break it down into 3 levels like that, if you've got time to do it, if not, go with the intermediate and long term.
That's great advice, Powell, and thanks for giving that backstory. And this is a guy who has been in the game for a long time and speaking from a lot of experience. And I know that was something that Godfather and I worked on pretty early on, was saying, hey, look, let's get some of this segmented into different accounts. And, you know, one of the other things you might learn over time is there's certain brokers that are better at certain things and better to use for certain types of trading. I know Bonnie's spoken about in her option trading how she likes to use Think or Swim. And then what's the other, Bonnie, that you use for execution? I don't know if she's still in the call, but it's stuff that there's nothing wrong with having a couple of accounts, guys. And you might find there's nothing wrong with having a couple of accounts at a different broker. Because if one of them goes down, you can go into another account and do a trade.
For me, they had to be different brokers. They had to be completely different logins. Like I said, Fidelity, I do my forgot password, and that's the best thing for me.
IBKR's got some great margin rates too.
Well, I'm just saying that's what I use for the long. They're the worst to trade with, so that's where the IRA is and everything. They're just the worst to trade on was Fidelity. So that's the long term.
Yeah.
Awesome. Thank you guys. That's the end of our call today. We will cut it there. Thank you so much for joining y'all. I dropped a link to a review site for you guys to help us out. We are 2 reviews away from our more prominent listing on this website. That'll help us out a lot over here at Carnivore. We really appreciate you on the calls. Thank you for the votes on the content live stream starting next week. Yep, week of January 22nd.
How did that go? I don't think the panelists are allowed. I don't think we're allowed to see the answers. Do they see the answers? Or do you let us know?
I'll let you know. I'll look at the data.
Stay tuned. Clickbait. I love it.
Yeah, I'll let you guys know. But once again, really thank you guys, Roger, Powell, and Bonnie's gone. But thank you, Godfather. Thank y'all for being here.
Have a good day.
Thanks, everyone.
Thank you.
Stay warm.
Steve Lee.
Thanks, pal. Take care, Roger Godfather.